afternoon. This is Chris Brecher with a Simpler Stocks free video for January 5th, 2016. Basically, today was everything in the premium stocks, the Simpler Stocks premium video that I mentioned might happen, that I was worried about, seemed to happen. So it's, just so you know, the premium stocks subscribers have just gone up exponentially, and a lot of this is because of the sort of calls we've been having that happen to seem to be working. And this is what I wanted to show you, was what I call the domino effect today. Basically, you had the ESs, and we've been talking about this for a long time, on how the ESs and the SPX have been diverging from the transports. We mentioned, though, that what was going to be the trigger for the next leg down on the SPX. And this is what I wanted you to see. First thing I thought was if the Nikkei broke this level right here, and I'll show you on a 195, this is called a ledge trade. The more times you can connect the dots on a trend line, and the more horizontal, like you see here, the more significant. That's how it closed on Friday. My idea was if it broke this on the right, it was going to break this daily on the left. So what happened this morning? The Nikkei was down 600 points. Second thing we mentioned was the DJ China. And we were mentioning that if this breaks on a daily and doesn't hold this moving average, and I'll show you on a weekly and a daily because Thinkorswim doesn't have it on lower time frames, that we had this doji right here. See that doji? We had the 200-day right here, and it couldn't hold that. And if it rolled over here, because, that would become significant. So now you have the Nikkei open down, DJ China down 7%. In fact, the Chinese market ironically just started volatility halts today. Well, last night. The market is closed overnight if it falls 7%. It fell 7%, at least 7, was halted all day today. So a big key is going to be how China acts tomorrow. The way, and I'll get to this in a moment, that our ESs took back about half their loss. A lot of people think there's going to be some kind of government intervention. They're going to open up. So that was one reason we had to rally back. But we'll get to that in a minute. So here's the dominoes falling. You had China down. You had the Nikkei down. You had the transports that if they sold off again, there's a certain point where they're so far down to where they're getting to the, not 2015, not 2014, but the 2013 levels, right in this area, that eventually the SPY and the SPX and the ESs are going to kick in. So what you get today? You got the sell-off, and it was a lot more extreme. Big old sell-off. It's still not to this level that I think it's going to go. In fact, what all it did today is go to this level. First, we're going to show it on a weekly. You're going to see that 2013, that's like the SPX being at 1700. So you see, today it looks like only a blip. Looked like it was going to be a lot worse. It wasn't. Now what I'm going to do is put the SPX on two different time frames. So we're going to put it on a daily on the left and a 78 on the right. And you'll see where the support is, a mile away. And a support is not an actual price. It's a zone. That's the support zone. Today it's held it successfully. Why is one of the reasons? Look how oversold it got. When I was on the live chat on Simpler Options, I was talking about this oversold condition. Be careful being short here. It's always the quality of the rally that works off the oversold that determines if you're going to have another leg down. What I would look for in here is this right here. Now we have this area that's a resistance area. Are we going to just hover in these areas up here, have this red line go up here to the 0 line, and then it can have another oomph to the downside? We don't know that yet, but that's something I'm watching very carefully. Now, to get back to it, I want to show you what the overall market did. Got excited showing you these charts and the domino effect. And when I show you this domino effect, and you see like on the left, and I'm going to unlink it again, and you look at the Nikkei and what it did today, down to this level right here. All right? We are not close to that on the SPX yet. But the SPX, I think markets follow in tandem. So you see, this is in this level here. It's gotten under that little peak. That's like us going to this level here at the minimum, which is 1950. So I am watching that for the week coming up. This is another thing I'm watching, the Russell. Look at the Russell now is almost on its lows from August. Well, that's like the S&P being down here. So believe it or not, even with the big sell-off today, then it rallied a little. It didn't have the total washout that you need to resume an uptrend. And that's what I'm worried about. To show you actually what happened, the futures were down only 26, but a lot of that was a massive rally right on the close. Check this out on the ESs right on the close. Talking about a little short covering. Look at that big rally in here. 1985, 2010. 25 point rally literally in the last hour. So all of a sudden now, you're, it ends up being almost like a blip. And that's it. It looked like it was going to be a crash, only a blip. Yeah, the ES is down 26. Yeah, the NASDAQ down 83. The Russell only down 25. It was down about 35. Yeah, the Dow down 253. It was down 400. One of the tells today was bonds. That even when the market was near its lows, these bonds wouldn't go up more than a point. Now, there are two things to think about that. Either people aren't that risk averse and they pile into a safe haven, which means that the market could go up, or, and this is what happened in August, the Chinese government, when their currency weakens, dump our bonds. So every time their market has a huge sell-off, it seems like they sell our bonds. So that's something to definitely keep in mind, could have been part of it. The other thing we saw today was the Nikkei only down 480. It was down well over 600 points. Still had the transports down 156. It's still a real troubling sign. So what I'm watching for tomorrow, a couple of things. Number one, we had this sell-off that everybody said, oh, the end is near. Check out how many advancers there were. 982. That's not a washout. A real washout is when you have 200 advancers and 2,300 decliners. This time, 982 advancers. It's not too shabby on a down day. So just to let you know that. So a couple of things we're doing tomorrow. Tomorrow our chat starts, our live chat. We're very excited about that in the morning. Not going to go into too much detail, so I don't want everybody to get too excited if like the whole computer crashes in the morning and we don't get it working to optimum levels. But that is starting tomorrow. We will have a live chat for an hour and a half from 7:30 to 9 Eastern, and I'll be on from 8 to 8:20 to actually contribute live my voice and all that, and answer questions. I'll answer questions from 7:30 to 9 by typing or by talking, either one. Other thing, I'll be sharing all my screens, so you'll see what I'm researching, what I'm looking at through the eyes of a trader that's been doing it 30 years, what I think is relevant. Sort of like the videos I'm doing, but just expounding a little more in real time. Like you know, there's a $7 trial for 30 days. We've had 300 people at least a month sign up for the trials, and unbelievably, on the actual site, we've had a retention rate of the trial people between 60 and 70%. A lot of sites have about 10 to 20%. So I guess I'm doing something right, which is really, really flattering. So I hope you take us up on this. I hope you can join us for the live chat, and I will be talking to you tomorrow. Take care.